This is a situation where we're going to go ahead and use some Excel, but we're going to also use intelligent application to even simple function like minimum and max. This example is taken directly from a decision support system class, and it's going to be really helpful in order to see it. Okay, so what we're going to go ahead and do is to realize that we have a local pizza. I modified it a little bit. We have a local pizza place here, and we're going to go ahead and make it look a little bit better. And also we have known parameters here. I'm going to go ahead also. Okay, so first of all we have retirement. I'm going to press the check spelling F7. That there's two people, married couples. They have a retirement saving plan that they wanted to do that at 5% of their income. Or also, they considered if the 5% of their income has exceeded the $6,000, then they're going to default that to the $6,000. So not going to, even they make like $1 million, that's going to be a lot larger or greater value than 6,000. They're going to default to 6,000. Their personal exemption for the tax is going to be, sorry, here it's a different language, and we're going to go ahead and say exemption. It's going to be $3,000 for each one of them, and the standard deduction is $11,600. We're going to calculate their tax rate based on their income, but here is the trick. The first, from $1 to $17,000 out of their income, it's going to be taxed at 10%, and from $17,001 all the way up to $69,000, they're going to be taxed 15%. Anything higher than $69,000 all the way up to $300,000, it's going to be 25% tax. So if they made $100,000, let's say, the first $17,000 is going to be taxed at 10%. Then we're going to take away the $17,000 and see which of that amount is going to be between 17 and 69, and that amount, this much of amount, will be taxed at 15%. And anything higher than $69,000 is going to be taxed at 25%. Of course, before we come to their taxable income, we have to go through the calculation of the deduction and all that stuff. So let's go ahead and do the tax computation. Here it is. Okay, and we're going to go ahead and just copy this by stealing that format from the format painter, and we're going to go ahead and say the total income. The total income is going to be, let me go ahead and put here, say we have David, for example, and her name is Mary. That's their income here. So that's the income here. Okay, so I'm going to go ahead and put their income right here. You always put something like, let's say $50,000 for each for now. Of course, that could change based on the reality. So let's go ahead and do that also for better testing. So that's their income. The total income in that case, it's going to be basically these two values. So the sum, or better yet, this one here plus this one here. So that's basically their income, that total income. The retirement saving, that's what gets a little bit interesting now. Retirement saving. We want to see, because 5% of the $100,000 is going to be $5,000. I could do that mentally. Also, their maximum saving is $6,000. So what we're going to do in order to get the minimum of the $5,000 or the $6,000, it's going to be using the minimum function of this multiplied by, okay, the 5%, or the $6,000. So here we go. So in this case, you could see that easily calculated. If that happens to be, let's say $80,000, then we're going to default to the $6,000 because David income plus Mary's income has exceeded the $30,000. So that 5% of $130,000 is going to be greater than $6,000. So the minimum is going to grab the $6,000 as a result of this. If I change that back to $50,000 with that initial assumption, it's going to go back to the minimum, which is in this case is the $5,000. Also, we have personal exemption for both of them. Here we go. And it's going to be 2 multiplied by this one here. So that's basically what we're going to get for that. And I'm going to go ahead and make it a little bit smaller so you'll be still seeing this. And also we have the standard deduction, which is going to be just to copy that value equal this value right here. Very good. And now we're going to go ahead and say, what is that taxable income? So we're going to tax that. We're not going to tax everything because we have to take the retirement saving, personal exemption, and standard deduction. So the taxable income is going to be the total income minus the sum of all these. Here we go. Okay. So now we ended up with this one here. So I'm going to go ahead and color it. This is really the value that is going to be taxable. Okay. So now, based on this one here, the first 17,000 out of this amount is going to be taxable at 10%. After that, anything between 17 up to 69,000 is going to be taxable at 15%. And anything above of that is going to be taxable at 25%. So let's go ahead and see how we're going to do that. So the thing here, I'm going to say here, tax at, okay, I could use that, at 10% rate. So remember, that's only the $15,000 is going to be taxable at that amount of money, which is 10%. So what we're going to do here, we're going to say, okay, make sure that we're going to do it correctly. We're going to look at this one here, start with equal sign, this one here, multiplied by, okay, multiplied by the minimum of either this or this. So because the person might have made less than $17,000, so we're still going to be actually taxing it at minimum. But now, since $76,000 is a lot larger than $17,000, so we're going to only tax the first $17,000 out of that at the rate of 10%. I hope you take your minutes just to think about this so you'll be able to see it. You should be able to see 1,700 because that's basically 10% of the 1,700. So now we tax the first 10% of the salary at 10%. Now we're going to be looking at the tax at 15% rate, okay? And what's going to be equal sign, of course, okay? But now we're going to see if this one here, okay, is greater than this one here. Let's mean if that is the case, then we're going to be actually doing the tax or part of that amount as long as up to 69,000 at 15%. So it's going to be this one here, which is 15%. Okay, as that we're going to do it here, multiplied. Okay, multiplied by the minimum. Okay, minimum multiplied by the minimum. Okay, open parentheses. Okay, the minimum of either this, okay, or this. Here we go. All right, going to be that. Of course, we have to subtract. Don't forget, because we already taxed the first 17,000. Take that out. Otherwise, if the amount is not greater than $17,000, so there's no need to apply any tax, so it will be zero. Again, I'm asking you to take your time in order to see how elegant is this calculation. I'm saying here, if the taxable income is greater than 17,000, then we have to really see how much of that amount is going to be taxable at 15%. If that is true, we're going to take actually the 15% multiplied by the minimum of this and this. Meaning what? Meaning in this case, since the A9 is less than 76,000, so we're going to actually tax it at $69,000. But don't forget to take that the $17,000, which already we've been penalized or taxed for it. So what are we going to go ahead and hit enter? And notice in this case we got like really a minus sign, so I want to see where is that minus sign coming from. So let me go ahead and, oh, that should be, this is the -8, and this one here, let's go ahead and say minimum B17. That's basically here, and the E9, it should be this one here, and this is, oh, I'm sorry, I have to put another set of parentheses here. Sorry about that, because it really multiplied it by minimum. Rule of order, it was ignored, and that's very critical to make sure. So let's go ahead and save that rule of order actually multiplied the minimum result, then subtracted the E8, which is completely wrong. However, we have to really figure out what is really the amount. The amount is going to be the minimum of the 69,000, which is the minimum, minus the 17. Then we multiply it by the 8, by the 15%. Okay, great. At least we're making a mistake. We're learning from it, so this is good. And we're going to go ahead and also see the tax at 15%. Okay, great. And we're going to go ahead and see here if what we're going to do with this, if is going to be, again, we're going to look at the fact that if this is greater than this, okay, which is in this case it is, then we're going to do very similar to what we had before, except this time I'm going to take the 25%, multiply open parentheses the minimum of this, okay, so you notice here this one here, all right, or the minimum of this one here, because we don't want to go all the way to this one here, 3,000. Of course, we have to subtract, in this case, the 69,000, because we already have taxed. We already taxed that much amount from it. And in this case, also, I'm very aware of the fact that I have to really put in parentheses. Otherwise, it's going to be 0. And notice it's, of course, a small amount, because what's left really little money to be taxed at that. And here we go. So the total tax is going to be the sum of all these here, and this is going to be brilliant. One second here. If this business have to report quarterly tax, then we would say here estimated tax per quarter. Okay. And we could go ahead and say, okay, this is how much they have to pay divided by 4. Take your time to do this, and please notice those are probably, they were intelligent use of minimum function. Hit escape here. Intelligent use also of minimum function, and how we looked at this. You know, it makes you think, and that's really the whole purpose from this video. And also it makes you think here to see how if statement is used to see the calculation without having to really do a serious calculation on the side. Everything can be done with a little bit of added thinking to the formula that we created. Okay, thank you very much for taking your time. This is Dr. Sam Hijazi, and I will see you in the next video.